Welcome to Value Investing University. My name is Mariusz Konieczny, and in this video I will be talking to you about finding great investment opportunities. In your investment universe, there are thousands and thousands of publicly traded companies that you could invest in and possibly make some decent returns on. However, if you are a large money manager with billions of dollars of assets under management, your investment universe is very tiny. You can pretty much only invest in big blue chip companies. However, if you are an individual investor who does not have hundreds of millions of dollars to invest, you can pretty much invest in anything. You can invest in companies of any size, which gives you a tremendous advantage over the big boys. With that being said, how do you find great investment opportunities? And the answer is simple. There is no single place where you can find them. One of my best investment ideas came from the editor of my first book, Why Are We So Clueless About the Stock Market? The name of the company was Arctic-Cat, which manufactures snowmobiles and ATVs. When I purchased this stock in 2009, it was trading for less than $4 per share. And today, the stock is trading for more than $40 per share. Although the stock was a total no-brainer when I bought it, very few people knew about it. And you see, there are plenty of stocks out there that will appreciate significantly in the future. But in order to benefit from these gains, you first have to find them, and then you have to invest in them when the stock prices are low. In this video, I will show you some of the ways that I use to locate investment opportunities that have the potential to deliver high investment returns in the future. These ways include reading various blogs, following specific hedge fund managers, and reading investment sharing websites, and paying attention to insider buys. And no, these are not all the methods that you can use, but this is good enough for you to find some great winners. So let's go ahead and get started. There are a variety of investment blogs on the internet offering different kinds of advice, and it can be kind of difficult to find the good ones. People start investment blogs for various different reasons. Some want to write about various investment ideas in order to get feedback from others. Others do it because they believe that when they write about specific companies, it really forces them to study and understand these companies in and out. Whatever reasons they have for starting investment blogs are not that important. What is important is that investment blogs are one of the most efficient ways of finding actionable investment ideas. You see, these writers already did the groundwork for you, and all you have to do is read what they have to say. It is like having your own employees working hard for you, trying to make you money, and the best part about it is that you don't have to pay for it. The following is a list of blogs that I personally read, and I recommend them to anyone who is interested in finding their own investment opportunities.
Old School Value is a website run by Jay June, who was introduced to the stock market investing through his father. Unfortunately, he considered his experience to be negative because his father was more of a day trader than an intelligent investor. Like most investors, he chased quick profits by acting on stock tips from friends and buying into story stocks with the hope of hitting it big. No wonder Jay viewed stocks as a gamble. Then when he became an adult and got a job, he started thinking about retirement. After turning into the investment industry for help and becoming disappointed, he decided to manage his own money. Without any formal education in finance and accounting, he had to learn about investing by reading value investing books. And to keep a record and apply everything that he was learning, he started Old School Value as a journal. When you arrive at the Old School Value website, pay attention to the three tags: screeners, forum, and blog. Under screeners, you can find various stock ideas that meet certain criteria. For example, if you want to look for stocks trading below net working capital, you would click on the link here and be taken to a page where you would have various stocks generated that fit this criteria, and you can go one by one and study them and decide if any one of them would fit into your investment portfolio. Another example, if you wanted to generate a list of stocks with negative enterprise value, you would click here, and again his website would generate a list of stocks that fit this investment criteria, and you yourself can go through each one of them and study it in more detail. If you would like to find out more about his screens, I would suggest you read Screen Overview for more details. The next tag that is useful is the forum, and if we click on it, it will take you to a forum with various discussions about many different topics. But in this place you can find discussions about various different ideas. For example, if we click on value stock idea, you will be taken to a page, and let's say we'll scroll through some of these topics and click on current nets. We are taken to various discussions about individual companies. For example, in here they have a discussion about GRVY and other stocks that might interest you, and here you, by reading this, you can get some introduction into what other investors are saying about it. And finally, the third tag that I want to discuss here is blog. And here you will find posts by Jay June and occasionally by other writers about all kinds of different topics pertaining to value investing. Occasionally you will find a write-up on an investment idea, and Jay also updates his readers on his personal portfolio. So if we go ahead and access this one here, you can see that you are taken to a post where he discusses various stock ideas that he holds in his portfolio, why he holds them, and by reading this you can get an idea of the kinds of stocks that he likes, why he likes them, and this can save you a lot of time while you're searching for ideas. And from here you can take it further by studying them in more detail and deciding if any of them fit your investment criteria. Barrel Karsan is a blog run by Sai Karsan, the fund manager of Karsan Value Fund. Sai is one of the most active bloggers among value investing bloggers because he posts every day. Readers can learn about stock ideas by accessing three sections of the blog: the fund, value in action, and stock ideas. Under the fund section, he updates his readers on the fund's performance, and if we click on the Q1, you can see he talks about the performance, but within this write-up he also talks about various stocks inside his portfolio. So this is one of the ways that you can find interesting investment ideas. Under stock ideas, he discusses various different companies, and by scrolling through it, you can click on any one of them and read about what he thinks about a particular company. But one thing that I want to point out, just because a specific company is listed here does not mean that he likes it and that he's invested in it. All it means that he in the past wrote about it, and if, let's say, you're interested in Radio Shack, you can simply click here and read his opinions on whether it is a good possible investment or not. Under Value in Action, he writes about past value investing ideas and how they worked out. So this section might not necessarily be the best place to find the most recent stock recommendations, but sometimes some of these companies declined 50 or 60%, and it's not a bad idea to read what he wrote in the past. So let's say we click on Office Max. It takes you to a write-up of, a very short write-up of what he thinks about it. Adventures in Capitalism is one of my favorite blogs on the internet. It is run by Harris Kupperman, whose nickname is Cuppy. Even though he's a self-taught investor, he has one of the most incredible track records I have ever heard of. $1 invested in 2003 when his fund, Praetorian Capital, was launched, turned into $26 before the market collapsed in 2008. As you can probably imagine, the 2008 was extremely tough for his fund, and clients' redemptions made things even worse as he was forced to sell small cap companies which were very illiquid, sending stock prices even lower. After this terrible experience, he closed his fund to new investors because he simply didn't want to deal with panicky clients. With that being said, he doesn't write very frequently on his blog, but whatever he writes is very insightful, and other investors can follow some of his investment ideas. He still focuses on small cap companies, but unlike other small cap investors, he seeks companies with a big upside that could potentially go up 5 to 10 times. His specialty is finding small cap companies that will become big companies in the future. While some other value investors completely ignore the macro picture, he places a lot of emphasis on it because it provides the win at the back and compensates for some of his mistakes. Once he identifies a particular trend, he looks for the best companies in the particular industries that will benefit from it. Because his fund takes concentrated positions in individual companies, his research is extremely detailed. He gets to know the management and the industry very well. If we scroll down through his web page, we can see that there are a lot of different topics, and most of them do not include stock market recommendations, but sometimes they do. For example, if we access the first post, "The drillers aren't going bust," he mentions two companies within it, Energold and Boart Longyear, that trades on the Australian Stock Exchange. And while his write-ups are not extremely long because he's a busy guy and he's also running another publicly traded company, he doesn't have the time to explain everything in details, but whatever he does provide is enough for you to get an idea of whether you want to get interested in a particular company or not and do the research yourself. Also, if you want to ask Cuppy a question, you can do so by sending him a message, and also you can read about what other people asked and what his response was. And a lot of times you can find mentions of various different companies. Again, for example, here they talk about Energold, and by reading these you can get access to a lot of investment ideas that you probably never heard of. Long-Term Value blog is run by an anonymous person who started it as a diary so that he could be forced to formally detail his thinking behind each position. His portfolio is divided into two categories: core positions and value investments. Core positions consist of companies run by respected capital allocators such as Prem Watsa from Fairfax Financial and some income-producing equities. None of these positions are discussed on the blog. The only position discussed on his blog fall under the category of value investments. He likes to look for opportunities where he might have some kind of edge. For example, situations that are hard to understand would meet this definition. He also looks at spin-offs, mergers, and other special situations that offer identifiable catalysts to help the market realize the hidden value. In addition to write-ups about various investment ideas, the blog also contains a separate section where the author's entire portfolio is published. Let's click on it. As you can see, there is a lot of different investment positions listed here, and each security is listed separately with a purchase date, average cost, and a target price. So as an investor, you can quickly scan through this list and compare the average cost to the target price and determine whether there's enough potential to dig a little deeper into this particular investment opportunity and see if you want to add it to your investment portfolio. Value Uncovered is a blog run by Adam Suess, who is an individual investor focused primarily on small capitalization companies overlooked by other investors. Because he's an avid poker player, he finds many similarities between the game of poker and investing. He says that a successful poker player wins not only by playing the cards, but because his opponents rush into decisions with incomplete information, miscalculate probabilities, or let the emotions cloud their judgments. On his blog, he focuses on writing and analyzing companies in two investment areas: value investments and special situations. He identifies value investments as mostly small cap, obscure stocks trading at a large discount to intrinsic value, and special situations as merger arbitrage, going private transactions, self-tender offers, and bankruptcy plays. His goal is to outperform the market in both bull and bear scenarios by sticking to fundamental analysis, finding bargains, and maintaining strict discipline. I'm very impressed by Adam's work ethic and quest to become a great investor. For example, he went through 3,700 pink sheet stocks one by one to create a watch list of several hundred companies. He borrowed this idea from Warren Buffett, who went through 20,000 pages in the Moody's manual when he started. Anyone who has the patience to do what Adam has done has the passion for investing, and his readers of the blog can greatly benefit from his wisdom and various investment ideas. Above Average Odds Investing is a blog run by Ryan O'Connor, who is a managing partner and co-portfolio manager at Three Arch Opportunity Limited Partnership, a value-centric investment management firm that provides portfolio management services to like-minded individual investors and institutions through a private investment partnership. Unlike other blogs, Ryan does extremely detailed stock analysis, thus his stock reports tend to be very long. In addition to writing his own investment ideas, he allows other successful money managers to guest post their investment ideas on the Above Average Odds investment blog. For example, if we scroll down, we can find an investment idea for Radian Logistics, which was written by Torin Eastburn, a portfolio manager of Montesol Capital. And what this does is this allows his readers to benefit from investment ideas by other managers who do not necessarily have their own blogs to share their ideas with the readers. Whopper Investments is a blog run by an author who is a deep value investor focused on microcap stocks. He tries to focus on stocks that are trading at extraordinary cheap multiples with hidden assets and a potential for immediate value creation. While some investors like to use various quantitative screens to find investment ideas, such as previously described on Old School Value blog, Whopper does not like to use this method. Most of the ideas that he comes up with would never be found through quantitative screens because most of the value in his stock picks is in hidden assets that can only be found by carefully reading the financial reports. Motiwala Capital is a blog run by Abid Motiwala, who is the founder and owner of Motiwala Capital, a fee-only independent investment management firm based in Irwin, Texas. Abid follows value-oriented bottom-up investing by researching one company at a time. He prefers to invest and write about good businesses trading below their intrinsic values or great businesses trading at reasonable prices. He avoids leverage and margin, and he does not short stocks. Frankly Speaking is a blog run by Frank Voisin, and even though Frank is only in his early 20s, he has accomplished quite a bit. He was a successful restaurateur during his college years, while he was completing concurrent undergrad degrees. Later, he sold his restaurants and returned to school to complete his JD and MBA degrees. He was introduced to value investing by Sai Karsan of Barrel Karsan, another blog featured in this video. On his blog, Frank likes to write about unloved and underfollowed investment opportunities that he can add to his investment portfolio. Pakia Funds is a blog run by Paris Dagley, who manages his personal money by following the value investing approach to investing. The investors that inspired him the most are Warren Buffett, Ben Graham, Monish Pabrai, and Charlie Munger. His approach to investing is to wait for companies with solid economics and great management to run into short-term problems that cause investors to panic and sell their shares for ridiculously low prices. On his blog, he periodically updates his readers about his portfolio, and also readers of his blog can access and learn about what he holds in his personal portfolio by accessing the portfolio tag. And as you can see, he runs a concentrated portfolio, and as of the date of this recording, he held Paladin Ventures, Yukon Nevada Gold, the Dalan Company, Bank of America, Taro Pharma, and Gold Group Mining in his investment portfolio. What I like about his portfolio is that because it's so concentrated, he understands very well each individual investment and has quite high conviction in each of his positions. So you can very quickly scan through this list and study them on your own, and see if you would also like to own them. And finally, but not the least, my personal blog at classicvalueinvestors.com. You can access it by clicking our blog. And if you are watching this video, you probably already visited my blog. Otherwise, how else would you find out about my videos? So as a result, I will not be spending much time here. But the thing that I want to say is sometimes I write about various investment ideas on my blog. I used to write about them more frequently than I do now, and it's because right now I write 3 investment ideas per month for my investment newsletter, and as a result I do not have as much time left to write separate investment ideas for my blog.
In investing, unlike other disciplines, you do not get rewarded for innovation. Actually, you get rewarded for stealing investment ideas from other people, assuming, of course, you stole the right investment ideas. A very good source of actionable investment opportunities is other investors, such as hedge funds. While some of them like to be secretive about what they invest in certain cases, the law forces them to show you their portfolios through Schedule 13D, Schedule 13G, and Form 13F. In my other video, Navigating Edgar, I talk about these forms in detail, so I'm not going to repeat myself here. While some investors are very aware of the fact that yes, they can copy the investment portfolios of various money managers, the majority of them go about it the wrong way. You see, they mostly follow investors such as Warren Buffett, Seth Klarman, David Einhorn, or Bruce Berkowitz. And to be clear, there's nothing wrong with following these great investors. But the problem is that these individuals have way too much money under management. And consequently, their universe of investment opportunities is very tiny. Obviously because of their size. They are forced to invest pretty much in only large cap companies, which are usually followed by hundreds and hundreds of analysts. It is much harder for them to find mispricing in large cap companies than it is for you and I to find them in small cap companies. Many times small cap companies have no following on Wall Street and very few people know about them. Yet they might be some of the greatest investment opportunities of all time. You see, when Warren Buffett was younger and had much less money under management, these are the kind of ideas that he invested in. So if you want to find extremely profitable investment ideas, you want to follow money managers who will be as big as Seth Klarman or David Einhorn in 10, 20, or 30 years from now. But now, because they are currently running very little money in relation to the wells that I just named, they can go after companies with market caps, let's say, between $30 and $100 million. And when they buy more than 5% of these individual companies, they are required by law to disclose their purchases through Schedule 13D and 13G. In this video, I don't just want to show you, well, go out there and follow some hedge fund managers. I want to give you specific names that you should pay attention to. First, I will give you the names and short description. Then at the end of this section, I will show you how to access their filings. Kinderhook Capital Management is a registered investment advisory firm founded in 2003. It is located in Fort Lee, New Jersey. Stephen Clearman and Tushar Shah are the company's managing partners. The company manages a concentrated portfolio of investments in companies that they believe have the potential to grow substantially over at least a 3 to 5 year period. They like to invest on companies with attractive margins and returns on equity. They typically invest between $5 and $20 million into one position. Rutabaga Capital Management is a Boston-based investment management firm run by Peter Schliemann. He launched the company in 1999 after 2 decades at D.L. Babson, where he managed Microcap Enterprise Fund. At Rutabaga, Peter likes to focus on unloved and underfollowed companies that are having temporary problems which are solvable. While he prefers his investments to have some kind of catalyst, he does not mind holding an investment for 2 or 3 years in order for the full turnaround to run its course. He also likes companies with dominant niches and strong balance sheet. But occasionally, he will buy leveraged companies as long as they have enough cash flow to service this debt and pay it down. Nantahala Capital Management is located in Stamford, Connecticut. The firm was founded in 2004 by Wilmot Harkey, who at the time was only 26 years old. Currently, he runs the company with his partner, Dan Mack, who joined him as a partner 3 years later. They invest in both equity and debt securities that appear to be mispriced for identifiable reasons that are expected to be corrected in the near future. They like to focus mostly on small cap companies because they believe that they are up against less sophisticated competition. When they invest in companies, they truly take their time to understand them very well because they believe that the best way to get an edge is to know the companies better than anyone else. Coghill Capital Management is a Chicago-based investment advisory firm specializing in small-cap value investing. It was founded in 1995 by Clint Coghill, who currently serves as the president. James Schuler is the company's principal and chief financial officer. The company employs a bottom-up fundamental analysis approach to investing with identifiable catalysts. It focuses on small cap companies because, according to the company's management, this is where the biggest inefficiencies can be found. In addition to taking long positions in undervalued securities, the company also takes short positions in overvalued companies with fundamental flaws in their underlying businesses. Moab Capital Partners is a New York-based investment advisory firm. The company was founded in 2006 by Michael Rothenberg and David Sackler. They met in 1999 during their tenure at Perry Capital. They like to invest in event-driven situations that are independent of the general market. Also, on numerous occasions, they become activist investors where they try to make changes in the company that are in the best interest of all shareholders. Mangrove Partners Fund is a New York-based hedge fund that was started by Nathaniel August in April 2010. He believes that the day-to-day movements of the markets and the valuations of securities are highly inefficient as a result of emotions experienced by the market participants. In his view, the market prefers stocks of businesses that are popular, fast-growing, and steady in terms of earnings, cash flows, and dividends. Consequently, stocks of such companies are usually expensive. On the other hand, the market does not like stocks of companies that are unfashionable, small, illiquid, and uncertain. As a result, these companies are more likely to be on sale, and these are the kind of companies that Mangrove Partners like to invest in. Schultz Asset Management is an investment firm located in Purchase, New York. The company was founded in 1998 by George Schultz. The company focuses on special situations investing in financially troubled and distressed companies. Because of their complexity and litigious nature, many investors shy away from such investment opportunities. The fear, uncertainty, and lack of legal expertise creates tremendous opportunities for those who are willing to look into these investment ideas. Schultz Asset Management seeks to exploit these inefficiencies for the benefit of themselves and their clients. Raging Capital Management is a hedge fund located in Princeton, New Jersey. The company was founded by William Martin in April 2006. Unlike other money managers, William has a lot of experience in running and starting various businesses, which makes him a better investor. Prior to founding Raging Capital, he co-founded a number of financial information and media companies, such as Raging Bull in 1997, Indie Research in 2002, and Insider Score in 2004. Raging Capital Management views itself as an active and an engaged business owner in the companies that they invest in. They engage in continuous communications with the management of their companies, and for the most part, these communications are very constructive. However, at times, they find themselves in situations where they have to fight with the management to get them to act in the best interest of all shareholders. In these situations, they like to act as their own catalyst for value creation. Twelve West Capital Management is a New York-based hedge fund run by Joel Rahman. He launched his fund in October 2011 after spending a decade working as an analyst at Bridge Capital. The fund takes long and short positions in small and mid-cap companies.
Okay, now that I showed you some of the hedge funds that you might want to follow, let me show you how you can access their SEC filings so that you can get access to Schedule 13D, 13G, and 13F to see exactly what it is that they're buying or holding in their portfolios. So there are two ways you can do it. One way is kind of a shortcut that I created for you, that you can access these SEC documents through my website, or you can go to Edgar. So let me show you first through my website. So go to www.classicvalueinvestors.com, then go to my blog. Once you arrive at my blog, go to Resources and scroll down all the way to the bottom until you see hedge funds. And as you can see, we have a list of hedge funds that we discussed on this video, and all you have to do is click on any one of them and be taken to their SEC filings. There you go. But that's just a shortcut. That's something that I just created for you to be able to quickly access the SEC filings of these particular hedge funds that we discussed. In order to access these same filings by going through Edgar, let's go to Google. And type in Edgar. Choose Edgar Securities and Exchange Commission link. Search for company filings, company name, and in the company name box, type in any hedge fund that you would like to look up. So let's try Kinderhook Capital. And we are presented with more than one choice, and sometimes you have to try a few to be taken to the proper place. Let's try the last. I believe this is the last one. Yep, and as you can see, we are taken to the same page that we were before when we tried to access it through my website. And here, number one, we are at the right place, Kinderhook Partners, as you can see here. And below we have various Schedule 13Gs. And on the bottom we have Schedule 13D. Let's go back, try a different hedge fund. Let's say try Rutabaga. And here we are at Rutabaga Capital Management's SEC filings. And here, the first form we have 13F, then we have 13G, 13G, 13G. I do not see any 13Ds. Okay, let's go and try someone else. Nantahala Capital. Again, we have to choose from these options. I happen to know that the second option is the correct one. And here we are at Nantahala Capital Management SEC filings. The first form we see is Schedule 13G. Then we have 13F, and here we have Schedule 13D. So let me quickly explain what these forms are and how they are different from one another. Schedule 13D is a form that must be filed with the SEC under Rule 13D. Once a person or a group acquires more than 5% of any class of a company's shares, they are required to file Schedule 13D, which is a public document that can be viewed by anyone, just like we're doing now. And this form has to be filed within 10 days of achieving a 5% ownership stake. So let's take a look at this form, 13D. Notice that we're not being taken to a form yet, but after we click on it, we can already see what companies are involved filing this form. And as you can see, this form is filed by Nantahala Capital Management, and it is because it owns more than 5% of Imperial Holdings. So we don't really have to go any further. We already know the name of the company, and you can just take Imperial Holdings and find out the ticker symbol and research the company and see if you want to invest in it. If you want to go inside the form, just to show you what it looks like, again, you can find out, yes, this is Imperial Holdings, and the form is filed by Nantahala Capital Management. And I will slowly scroll down so you can see what this form looks like. Okay, let's go back. Now, Schedule 13G is a similar form to Schedule 13D in that it is also used to report an entity's ownership interest that is more than 5% of a particular company. What makes it different is that Schedule 13G is shorter than Schedule 13D, and the entity filing it does not intend to gain control of the company. In other words, the entity is planning to be only a passive investor. Let's take a look at Schedule 13G. Again, we don't even have to access the form, and we can already see what company they're buying, and it's Imperial Holdings in this case. And this is, as you can see, Schedule 13G, Imperial Holding, Nantahala Capital Management, and as you can see, this form is shorter than the previous one that we looked at. Okay, let's go back again. And finally, Schedule 13F is also known as the information required of institutional investment managers form. It is a form that has to be filed with the SEC by investment managers with more than 100 million in qualifying assets. This form must be filed within 45 days of the end of each quarter and must include a list of investment holdings. So let's go ahead and access it and then go inside the form. And as you can see, this is Form 13F. And what this form is pretty much, it shows you a list of all of the holdings that this particular hedge fund has in its portfolio. In this case, we have American Public Education, Bank of America, Bridgepoint Education, and you can scroll through it and see all of their holdings. Now, one thing that I want to point out is that in this case, Nantahala Capital Management, you can see Form 13F. Not all of the hedge funds that I discussed in this video will have a 13F in their SEC filings because, as I mentioned before, 13F is only required by institutions that have more than $100 million of assets under management. If a hedge fund doesn't have 100 million, then they don't have to file this form, and you don't know exactly all the positions that they hold. You only can find out about the positions that they own more than 5% of a particular company. So for example, if we go back and we search for Kinderhook Capital. As you can see, all we see here is a Schedule 13G and a bunch of 13Gs and 13D. This particular hedge fund does not have 13F filed, which means that they probably don't have $100 million of assets under management. So these forms are only of companies that they own 5% interest in them. But they might also own a bunch of other companies that there's no way for you to find out until they reach a size of $100 million of assets under management. So there you have it. Now you know which hedge funds you might want to follow, and you also know how you can access their SEC filings.
Reading blogs and following hedge funds most definitely exposes you to many very good investment ideas. However, when you read a blog, you are reading the investment ideas of one particular person. When you follow a hedge fund, you get the ideas of this particular hedge fund, but you don't really know why they like the investment. All you know is the ticker symbol of the company. Another way to find investment ideas is to become a member of various investment sharing websites. On these websites, members share investment opportunities with other members. These websites are usually exclusive to a limited number of members. However, to a certain degree, non-members or anyone with an internet connection can access content on these websites and benefit from someone else's work. I use these websites all the time for finding actionable investment ideas. Also, these websites are very useful for research purposes. For example, let's say I'm interested in learning about XYZ company. Well, I can go to any of these websites to find out if anyone else has already written about the company that I am interested in. Then after reading someone else's report, I can decide if I want to study the particular company any further. Also, I can read comments made by other members about XYZ company, which helps me learn about what other members of the site think about and whether they have any concerns about the particular company. So let's take a look at some of the investment sharing websites.
Value Investors Club is probably the most popular investment sharing website among value investors. It is a highly exclusive club for value investors who share investment ideas with each other by writing long and thoughtful analysis describing the opportunities. The site was founded in 1999 by hedge fund managers Joel Greenblatt and John Petrie of Gotham Capital. The reason why they started it was because they had a hard time finding quality investment write-ups and thoughtful analysis on the internet. It does not cost money to be a member of this club. Actually, the club pays out money to its members for winning investment ideas. Every week, one investment idea is chosen to be a winning pick, and the author receives a prize money of $5,000. If you do the math, it costs the founders more than $250,000 per year to run the site. In order to become a member of the club, one has to submit an online application with an investment recommendation. Because there's a very rigorous application process to obtain membership, only a few people become members. To maintain the membership, one has to submit 2 investment ideas per year. While Value Investors Club is exclusive only to a number of individuals, non-members can also view investment ideas shared by the club members by getting a guest pass. You can get 2 types of guest passes. One allows you to access these ideas with a 45-day delay, all you have to do is provide your email address. The other pass allows you instant access, and you do not need to provide your email address. With this pass, you can view the ideas with a 90-day delay. If we click on it, it takes you straight to the site. Let's log in to see what the site looks like. When you log in, you are taken to a page of investment ideas listed by most recent available first. You can click on any idea you like and be taken to the investment thesis. There's no particular format that the writers are required to follow to present their investment recommendations. Some ideas are longer and some ideas are shorter. At the bottom of the write-up, you can find comments made by other members. Unless you have a full membership, you cannot comment on any of these ideas, but you should definitely read the comments by others on investment ideas that you are interested in. Let's go back. By clicking here, you can go back to some older ideas, and I usually like to go back as far as 12 months, and some of these ideas have declined 50% or more and are even better ideas than they are today. There's one trick that I would like to show you just to kind of get around the 45-day delay if you do not have a full membership. If you leave the search box blank and click search, it will take you to the most recently submitted stock picks. Because you do not have a full membership, you cannot view any of these names. But you can see the names of these companies and ticker symbols, and you can take these ticker symbols and research the companies yourself. SumZero is an online community for buy-side investment professionals to share their investment research and network with one another. It is similar to Value Investors Club, but it has thousands of members, and each member's identity is visible. In addition to the investment sharing component, SumZero is kind of like a Facebook for buy-side analysts. Ironically, SumZero was co-founded in 2008 by Divya Narendra, who was the original co-founder of Facebook. In order to access investment recommendations on the site, one has to become a member. Membership is only open to applicants that work in the investment industry. Similar to Value Investors Club, in order to maintain membership, one has to submit investment ideas to share with others. One investment idea grants access to the site for 6 months, and the membership is free. While membership is limited to only investment professionals, non-professionals can also benefit from SumZero. Non-members can sign up for a weekly email to receive a top investment idea from a prior week. This dynamic might change because currently SumZero is supported mainly by ad revenue, but in the future they might introduce some kind of a paid membership model that would allow non-professionals to benefit from this great resource. Let me log in to show you what the site looks like once you become a member. I mainly use the research tab, and it takes you to the most recently filed investment ideas. You can click on whichever one you want to view the investment analysis. One neat thing about SumZero is that the author is required to name a price target that he thinks that the stock will trade for in the future. You can access the comments made by others here, and you can also contact the author. Contacting the author is a nice feature because it allows you to ask him or her questions about the company. I do it a lot when I'm looking at old ideas that may have declined 50%. I usually contact the author and ask him if he still likes the idea. This can save you hours and hours of research. Distressed Debt Investors Club is very similar to Value Investors Club, but it is not as well known. It was founded in 2009 and it focuses on credit, distressed, and fixed income special situation opportunities. The site was founded by an anonymous credit analyst who goes by the name of Hunter. The membership is capped at 250. 2 ideas per year are required to maintain membership. Members are anonymous, and non-members can access investment ideas with a delay. While Distressed Debt Investors Club, as the name suggests, focuses on debt, the site also includes many stock market investment ideas. Let me log in to show you around. Once you log in, you are taken to a page with many investment ideas, listed with the most recent on top. You can click on any idea you wish to view the investment write-up. Let's go back to the first one that we accessed before. Here's an investment idea, and to tell whether it is a debt or equity idea, you can find out by looking at the type of idea. In this example, it is a stock market idea as indicated by the word equity. The ticker symbol is ADES. Microcap Club is a relatively new website, but is becoming popular lately. It was started by Ian Castle to focus on small capitalization companies with market caps of less than 300 million. It is a free but exclusive club for experienced microcap investors to share and exchange stock investment ideas. In order to become a member, you have to apply and submit an investment idea. Let me log in to show you what it looks like. After logging in, you are taken to the site, which looks a bit different than the previous investment sharing website that I discussed before. And what I mean by this is that Microcap Club is a forum. At first, there are various general discussions, and to access individual stock ideas, we have to scroll down to the public company discussion by sector. Here you can access various companies by sectors, and if we click, for example, on basic materials sector, we are taken to a page where various investment opportunities are presented. And if we, for example, click on Vertex Energy, we are taken to an investment write-up by the founder of the site, and here he presents his investment thesis, and below there are various members that comment on it and ask him questions. Let's go back. Let's take a look at Fusion Energy. This investment idea is written by David, and here he presents his investment thesis, and again on the bottom there are members who comment and ask him questions about this particular investment. Another interesting feature of the microcap is its blog. So let's go ahead and access it. And one thing that I want to point out about the blog is that you do not have to be a member of the microcap club to be able to read the blog, because it is open to the public. And the blog articles are mainly written by Ian Castle, who, as I mentioned before, is the founder of the club. And as you can see, there are various different topics on this blog. In this case, he writes about Noble Romans, pizza, and various other topics. But the thing that I want to bring to your attention is the microcap radio program, which I think is very useful for finding and being exposed to various investment ideas. During the radio recording, he and other members discuss various investment opportunities. And in this example, companies discussed were Remedent, Optimize RX, again, Noble Romans, ZAG, Destiny Media Technologies, and Volition RX.
Peter Lynch was right by saying that insiders buy for only one reason, which is that they think the stock price is cheap. I mean, think about it. If you were an executive of a company, would you buy the company's stock if it was overvalued? Well, of course not. But I hear many people say that, well, but insiders always think that their company is undervalued. Okay, well, this might be true, but thinking about something being undervalued and actually buying the stock with their own money are two completely different things. So the bottom line is this: if insiders are buying, then they think the stock is cheap. They might not be right about it, but it doesn't matter. You still need to pay attention to their buys. Then, after investigating the company, you can decide on your own if you want to buy it or not. And the government makes it easy for you to follow insider transactions because it requires them to report their buy and sell transactions on a form called Form 4. The website that I use to follow insider transactions is insidertrading.org. Let's take a look at it.
When you arrive at the main page, you see a lot of raw data. The site does not look pretty or anything, but it is not a beauty contest, so it doesn't really matter. Below you have a list of various buy and sell transactions reported on Form 4. Because you are looking for investment ideas, you probably want to narrow down your search to only insider buying, so you can click here to narrow down your search. And if you want to only see large transactions, then you can narrow down your search even further by clicking here. Everything here is self-explanatory. You have the type of the transaction, the date that it took place, the name of the company, the ticker symbol, the buyer, who the buyer is in relation to the company, how many shares the person bought, and at what price per share, total dollar value of the transaction, and how many shares this person owns after this transaction took place. One thing that you need to make sure is that you do not leave out the date. In this example, we have insider transactions for a period between September 7th, 2012 and September 8th, 2012. You must have a date, because if you don't, you will not get any results. For example, let's delete this for a second and click go. and we get no results. So as I mentioned before, you must have some kind of date for the computer to generate insider transactions for you. So now that you have a list of companies with insiders who are buying because they believe that their companies are cheap, you can go to work and study these companies one by one and decide whether you want to buy them for your own personal portfolio.
This video in no way covers all of the ways to find investment ideas. But if I were to cover them all, I would have to create 100 of videos like this just to fit everything in. The purpose of this video was to show you some of the ways that I use to find investment ideas for my own portfolio and Ultimate Value Finder, which is my monthly stock picking newsletter. The final thought that I want to emphasize is this. Whether you get a particular investment idea from my blog, someone else's blog, or a hedge fund filing, this is just the starting point. Then you have to study and analyze the company yourself. You are the person who needs to decide whether or not to invest in a particular stock. However, if you do not do the necessary work and you lose money, then you can only blame yourself. With that being said, thanks for watching, and I hope you liked it.